A perfect 10. That was the score for Chinese diver Wu Minxia in the Olympic 3-metre springboard final. It also goes for European stocks, which have now risen 10 weeks in a row, the longest winning streak since 2005. This is today's Market Pulse. With me now is Richard Hubbard. He's writer of Reuters Global Markets Reports. Richard, European stocks are on a truly remarkable run. 10 weeks in a row of upswings. Can it continue?
Well, you know, the European corporate sector is emerging from this crisis in a lot better shape than both the government sector and the household sector. And some people do believe that looking ahead to next year, even if you factor in only modest growth, the yield on corporate debt and corporate equities is the best you can do at the moment.
We're around about what? Well, I presume it's more than the 1.5% you get on bonds.
Indeed, the stock 600, it's about 4%, and on the blue chip index, you're looking at a 4.5% yield at current levels.
So you're saying stock markets and fund managers are taking a longer term view. In the shorter term, September is shaping up to be something of a crunch month.
A real crunch, yeah. I mean, we've got so many events coming next month. The key ones obviously being the Fed meeting, and the market's really waiting for details of what the ECB plans to do. And there's a lot of expectation that once the Germans approve the new ESM, we may hear those details, and that will be around the middle of the month as well.
But we can also assume or expect that trading volumes will pick up too. That makes for a fairly volatile combination. Crunch month in terms of events plus higher volumes. Yes, indeed.
I would think that there's some nervousness about how the month could play out, but it's all really, the risk it's been largely assuaged by Draghi's comments of late that he will do everything it takes to prevent the breakup of the Eurozone. And I mean, as long as you believe him, and there's no reason to not, it's looking like it could be quite strong. So
new highs for the year in terms of European stocks? Perhaps?
We're very close. The Stoxx 300 index is just below its 2012 high, but it's still not that far. It's really just back to where it was about 12 months ago, and when you go back like 18 months to the start of last year, we're not there yet.
Okay, let's finish up with oil. Brent is down around 1% today. But oil's also on a remarkable run. Officially bull market territory, although that can't be on growth forecasts, surely.
No.
On growth hopes.
Again, we're talking quantitative easing here, either from the Fed and or the central bank as well, the European Central Bank as well. I mean, people have priced this in pretty much across the board in the commodities markets, and you know, the risk is they get disappointed really from here.
Okay, Richard, thank you very much. Well, our chart of the day looks at euro-dollar. The single currency stuck in its downtrend for the year, but technical strategist Valerie Gastaldi of Day by Day says a deeper collapse isn't on the cards just yet.
What we can expect for a few days is the rally to go on to about 126 on the euro-dollar. That's about 38% retracement of the previous fall. Now, we didn't go exactly to the major support, so maybe we'll have another fall later, but that support is very strong, and we don't expect the euro-dollar to move significantly lower soon.
That's all for now, but keep up with us on Twitter at Reuters Insider and join us at this time each weekday for a snapshot of what's moving on markets and why. I'm Jamie McGeever. This is Reuters.